So here we are at Throgmorton Associates Shrewsbury headquarters for our Ask the Expert slot with Nick. And Nick, you brought a friend along with you today. Introduce us.
Great to see you, Carl. We have Becky Furber, recently joined us. Fantastic local. Saw about us on the programme over a number of editions and got a little bit of a feel for the practice. When there were big changes in her existing practice, decided it might be worth reaching out and having a chat. So you've been a bit of a matchmaker. Excellent.
I'm shocked she's answered to Cilla Black. Excellent to know. Becky, welcome to the show, and thanks for watching us as well. Tell us a bit about you then, because you're a Shropshire lass, aren't you?
Yeah, so I live in Ellesmere, so not far away. Got a lot of sort of connections around the town, know a lot of people, and I'll be honest, like Nick alluded to, I've watched him on the show, and I heard great things from my last practice about Nick. And yeah, just with being local and changes that have happened, I reached out, and we've got a mutual friend as well.
Mutual friend, yeah.
Who introduced us. So yeah.
Networking connections, it really does work, doesn't
it? Does
it?
help.
Tell us a bit about you then, your background. Have you always been in this industry? Have you done other jobs?
So a lot of my life I've been in the hospitality trade. I was an operations manager. I looked after about 400 people. So I think I've got my communication skills from that part of my life, definitely. Great part of my life as well. So long story short, COVID hit, and I thought this was a really great opportunity to maybe have a second career. I'd already looked into sort of the world of finance, and I'd helped my friends and my family and things sort of build, whether it's build credit, get on the mortgage, the property ladder, or even sort of make their investments work a little bit harder. And like I say, COVID hit, and I thought this is my opportunity. I studied, got my qualifications, and the rest is history. I'm now in the world of finance. So,
well, of course, we've talked to you on this show before, Nick, haven't we, about how you made the transition from a teaching background as well, didn't you? So,
absolutely. Yeah. People do join St James's Place. People do come into the industry from all sorts of walks of life. The St James's Place Academy has been going over 10 years now. And brings non-industry people across, gets them qualified, or if they've already qualified, as Becky was, gives them some finer tuning of the other skills that you need to do the job. Not just about the paperwork, it's more about the people side of it and the processes and the regulatory side. It's a fair old beast from the outside looking in, but with the help of something like the Academy, really helps get people up to speed and ready to hit the ground and meet people and start helping people.
Well, if you've had a team of 400 people working with you, you've got the people side of it nailed by the sound of it, I would hope so.
I hope so.
What's the things you've been up to? What are you up to at the moment? What's is it seasonal, your work, or what's January involve?
So January, everyone seems to have this sort of fresh outlook of, New Year's resolutions, let's get things sorted. Quite a few clients have reached out for more sort of random things, I'd say, in January. So things like setting up legacy for their children and things that they've probably put off throughout the year, but New Year's resolution. I think next month and March will be very much tax year end planning and busy. People sort of leaving it till the last minute and booking in. But yeah, a range of things, if I'm honest. And sorry.
And what are your particular specialist areas here? Are there particular specialisms that you have that you bring to the team here?
I think so. It's generic sort of advice that I offer. So there's no sort of one speciality that I deal with. But if I was to sort of pigeonhole what I mainly sort of deal with, I'd say it's more the intergenerational planning. So making sure that things are set up for families from a personal perspective, but then also for later generations as well.
And in general terms, do you think that's something people are thinking about a bit more now than they perhaps were a few years ago? Maybe COVID's impacted that, I don't know.
Absolutely. I think as well, understanding the power of what you could do now and just little changes that could make a massive impact in the future. For example, setting up a pension for your child. Everyone's got a £3,600 allowance, whether you work or not, from the age of 0. So actually popping a small, affordable amount into a pension could have such an impact over the amount of years that it would be invested. So that when they come to 55 or 65, depending on their pension age, it's given them a really good head start. And I don't know about you guys, but when I sort of started working, pension provisions is not necessarily the number one thing on your mind.
I remember when I got my first full-time job, and I remember the pensions office came down and said, you've got a choice now, would you like to start contributing to your pension? And I always remember my dad saying, do it now, do it the earliest you possibly can.
Yeah. great advice.
You don't think, but you think, oh, pensions, retirement, that's years away.
Yeah.
Nothing tangible for your money.
That's right, yeah. It's kind of it's a figure on a piece of paper, isn't it?
Absolutely.
What does it mean? But then when you forward it forecasting, you've got the compound interest on. Something else that's changed over recent years has been the need for parents, grandparents to help their children nowadays, with a deposit towards getting on the housing ladder, as you say. It used to be, well, it's all done in the will, they'll get what they get when I'm no longer here. People are living that much longer. Your kids, if you're 80, 90, maybe when you pass away, your kids are going to be in their 60s when you passed away. They don't need the money then. The grandkids need it probably now. The great grandkids will need it. So it's speeding up that gifting and the intergenerational transfer. And if you do it wrong, it can cost a fortune in tax. If you do it right, and you've got enough to be able to time and phase these gifts, it could be gifts to trust. It doesn't have to be to them directly. You can still keep control of some of these things. And the inheritance tax is still a big problem for a lot of people. Very generous reliefs now, but still a lot of people caught in the trap.
In general terms, you see a lot more, don't you? People saying, well, if we want to pass some money down to the generations, let's do it while we're all still here.
Yeah.
Let's not wait until the end, because we want to see our children, our grandchildren maybe benefit. I mean, you've got a lot more people living from home, haven't you? Because they can't afford a property deposit.
I heard a lovely phrase the other day. Someone said, give these gifts with a warm hand rather than a cold hand.
I think that's good.
So whilst you're still here and able to see the benefit and see actually the impact it makes, rather than you passed on and then it's probably too late anyway for the people to receive it. They don't need it as much.
Absolutely.
But as well, just to add to your point, it's not about just gifting as well. Some people aren't in the position, say they're starting to retire and they still need their assets as such to live off. There's things you can do. You've got what's known as an annual exemption, so £3,000 per annum that you can gift away. But what you could do instead is pay a premium into a form of insurance that gives you a guaranteed payout at the end when you pass away. So it kind of provides a legacy for children, grandchildren as well. So it's not just about gifting, there's a lot of different areas to look into as well.
Is that exemption retrospective? Can you claim it back if you haven't claimed it in a particular year? Because I know there's some...
You can only go back 12 months on that one. So if you didn't give anything last year, you can do last year's and this year's, can't you?
Yeah.
And it's 3,000 per adult, so husband and wife could use 12,000 altogether.
Yeah. So don't hang around, basically. Be aware of what you can get hold of. So you're enjoying it?
Loving it, yeah. Everyone's been really friendly. Got a lot of support from the team. I've settled in. It feels like a lot longer since I've been here because I feel like a natural now with everything. So yes, I'm very grateful to sort of, well, I'm not trying to embarrass you on the TV, but you've been very welcoming, and so have the team. So
it is a team effort, and Becky's fit right in because she's got that personality. She's a people person, does a great deal for clients as well. And there aren't enough lady advisors in the industry. There are more than there were probably ever before, but there's still a disparity between the number of ladies and the number of gents. And ladies do naturally have a bit more empathy, and they generally deal better with older clients or people who are struggling. They do have different sorts of conversations. As much as we try, as guys, we try, it's a natural thing. And then with experience, you can get better at that stuff. But Becky does it naturally, which is brilliant.
Excellent. Well, you'll be good to embarrassing you more now, Nick. You've got a fan from our last show here. We touched on pensions a little bit, but after we were talking about specifically different kinds of pension pots on the last show, Paul from Ellesmere got in touch and said, "Can I ask you?" He said, "I'm interested in hearing Nick talk about pensions on the show, and I wonder if he'd be kind enough to give me some advice." So, are you kind enough?
Absolutely.
Here we go. This is what he says. "I've got 3 private pensions as a self-employed person, spread across about 18 years. Does it automatically make sense to merge them together, or might that leave me worse off?" He says, "I'm 55 this year, so is it sensible to take my tax-free cash out of them all?"
There's more than one question.
There's a few questions actually there.
Yeah. So there are 2 ways to answer that. The brief answer is possibly for the first answer to the first question. In reality, you've got this flexibility. You've got 3 different pots. It might be more simple to administer going forward. Put them all in one and then move on, and you've got one pot to deal with, one provider hopefully, because 3 different providers will be sending 3 lots of annual information hopefully, 3 lots of options if he's getting to a stage when he might be starting thinking about drawing down. But some of those might well be old. He probably had them a long time. He's mentioned 18 years there. So some historic pensions had some really great features, some guaranteed annuity rates, some extra tax-free cash if they're the right type of plan. It might be that they were with profits schemes, and those funds have annual bonuses that are added to them, but they're not guaranteed. So if you're due to retire and there's a dip in worldwide markets, the provider could introduce a market value reduction that means your bonus is gone, and actually the value is reduced a bit by this penalty.
Yeah.
But if you move that around now whilst the bonus is there, then you're definitely getting the bonus at least. But you change it day by day if there's volatility. So each of the 3 plans might have different opportunities. It more depends on his outlook. Now, if he's 55 this year, when is he actually looking to draw down from the pot? Is he still paying into anything? Has he got another pot already that he can pay into? Could they be consolidated, and then he has a bit more of a plan about, well, if I pay X per month, at that age, I'm going to have a pot worth this, and then my income can be that. So it's an interesting question, but the answers are more questions, I'm afraid.
Yeah, it's almost, it occurred to me when Paul sent it in, it's almost, do you need it now? Do you need to draw down now? Have you got a particular, do you want to pay your mortgage off or whatever? Do you actually need it? Or do you want to go off on spoil yourself on a cruise or whatever?
And the opportunity to take tax-free cash isn't going away unless there's a change of rules, and people get nervous around tax year end or around budget times, and you can take 25% from these personal schemes, it seems he has to hear. That's 25% tax-free and then not have to buy an income. It used to be you'd buy a new annuity at the same time, so tax-free cash would come out, you're then doing a deal with Prudential or Scottish Widows or whoever, and then you've got guaranteed income for the rest of your life. But less and less people are doing that now. You can do actual income drawdown. So if he doesn't need the lump sum tax-free, and then he does start taking income in the future, a quarter of everything he takes each year could be tax-free. So you can withdraw some quite meaty amounts every year and pay a minimum amount of tax. And we spend a lot more time now with clients who are in the drawdown phase, looking at all of their pots and working out which pots are you best to take how much from to minimise your tax burden.
Are there people that maybe think that they can't do it that way from a drawing down point of view? Do they think they've got to draw it all down in one big chunk?
A lot of people we talk to about the drawdown option, they think they still got to do the annuity. They think that's still the only option. Right, so and the paperwork that they get from each provider has to have annuity calculations in there. So it says you've got this pot and it's quite, whatever the size is, and then the income that it actually dictates is actually that's not a lot of income for all of that money. What's wrong? But annuity rates were at all-time lows. They have been rising the last 12-18 months because with annuities as they have with interest rates and with gilt yields, that's how they sort of worked out. So people are getting more for their money now than they were, but they're still not getting the same as they were 15 years ago. But most people aren't drawing down on doing the annuity thing. And the benefits on death are much better if you're drawing down, because whatever's left in the pot can go to your spouse. Whatever's left in the pot when your spouse dies can go to the kids and can be inheritance tax free at each step. So some clients with multiple pots, the last thing they're touching is their pension because it's IHT free. And that's, so advice is key, because Paul will have these 3 assets, might have other things going on, so he really needs advice. He lives in Ellesmere, so does Becky.
So does Becky, exactly, Paul. Becky's just round the corner, so if you want to have a word, you know where to find her now. And also, if anybody else has got any other questions that they want to post to Nick, you're always happy, aren't you,
to please, it's great.
To answer them. And he's on Shrewsbury Business Parks, and come knock on the door. We've touched on year-end tax planning. It feels like we only just started January and we're already talking about the end of March. It feels like we're wishing the year away a little bit. But we're starting early this year, or is this typically the time when people should be starting to think about financial planning?
We in the industry as advisors try and start it as early as we can. People don't really want to think about it until January onwards. Some people, if they're businesses and they've got company tax year ends as well, they have that in mind as well. So it might be that they have a calendar year company tax year end and a personal tax year the same as everybody else's. So we've got the 2 different things that you're trying to comply with or maximise really. We've got a link which will be on the screen in a moment, but that takes you to the Throgmorton website, and it's a tax year end section, and there are some examples on there of different people and different things they might try and do. So it mentions ISAs, it mentions pensions, it mentions unit trusts, it mentions capital gains tax and things. There's also a downloadable guide, which is 17-18 page guide, all about options, tax year end. If it's downloaded sooner rather than later, you can start thinking about what you might do. You've then got time to think about it before the impending deadline. And best will in the world, if it's the 5th of April is the end of the tax year, you don't want to start thinking about middle of March, right, let's get on and do it, because it takes a while for these things to be put in place. Whoever your provider and whoever's helping on the advice, or you do it directly, it doesn't happen as smoothly or as quickly as you want it to probably. So give as much time as possible, reduce the stress, download it in the next couple of weeks and then start planning ahead. And if you need advice, seek a qualified advisor. That's, as we always say, isn't it? The health warning.
And don't leave it all lastminute.com. I must admit, I went to an event a couple of days ago, a business event, and there were accountants in attendance. And I always thought January that they were all just locked away in a room, desperately trying to get all the year-end tax planning, and they never came out. I don't know whether that's telling me that people are maybe planning a little bit ahead, or whether technology's helping to get rid of the big...
Or they've got a team of people in the office doing all the work.
Who are locked away, exactly. There's possibly a bit of that as well, isn't there?
Yeah.
What the next few weeks then, from your point of view, Becky, what's on the agenda? What have you got coming up?
I've been kindly given some clients from the practice, so I'm very much sort of getting to know introductions, doing overall reviews with my clients. And to be honest, up till now, they've all been so friendly and inviting, so I'm very grateful for the hospitality that they've shown. And literally, it is reviewing their affairs, looking at the different pots, like Nick says, and understanding what their objectives are, because we always go on about ISAs, pensions, unit trusts, investment bonds, you name it, all the jargon. But actually, what are we saving for? What are we trying to achieve? And how are we going to sort of live our best lives? So I think understanding that, we can then help plan backwards in a tax efficient way. So that's kind of...
But being a people person as well, as you said, is a really key to this, isn't it? Because, you're asking people to share some pretty sensitive personal details about themselves, aren't you? So.
And do you know what? Full disclosure is really important. But to actually, money, politics, taboo subject, to actually gain that trust and build that relationship with people is crucial, because the rest you can learn. You do qualifications, you can, and that's what we've done. But actually having the personable skills to relate and have life experiences as well that you can relate back with, it's just really important. And I think as that builds, it's...
And what's important, so there's a couple of things there. So on the practice perspective, it's great to have developing advisors coming through as the established people are retiring, because we do have that. We've got 16 advisors, 17 at the moment, soon to be 16, because one of the guys is retiring. So some of those clients will be looked after by Becky. And also, we're all on a limited time, so having people to come through to be directors of the future, to be leading the business as well as looking after clients is important. But coming in with a blank piece of paper and actually asking lots of questions, you'll find out a lot more about those clients, maybe than the existing advisor, because things get cosy. And you think, well, if they need anything, they'll just tell me. But actually, if you just sit and say, well, I don't know anything about you, just tell me. And the number of things that have come out that are new things that the client actually needs help with, but they thought the advisor was too busy, or they thought that it wasn't something that we could help with. It is amazing. So it's a great opportunity both ways around for a client to have an eager helper, and for an advisor to find lots of new people to talk to.
Yeah, absolutely.
Absolutely, excellent. Now, before we go, Nick, I can't go without asking you this important question.
Oh, God.
How's the dog training going?
Oh, that's all right.
We expected something worse than that. I know last time on the show you just got a new pup, hadn't you?
A new puppy.
So how's it all going?
Yeah,
he's a bit grayer.
Yeah, I'm a bit grayer. Yeah. So Wilson's still jet black. He's okay. So black Labrador. We took him for his longest walk the other day. We went from our house. It was my birthday on Monday, so we took him out. We walked to town and back, and wore him out a little bit. A nice coffee at Stop Cafe there, which was very dog friendly. They asked us inside. We were going to sit outside. It's quite a windy day Monday, you might remember. So they gave us a dog bowl and some treats and things. He was made welcome, more welcome than us. But it was lovely. And I wandered it back. It's just a different thing, isn't it? It's like having, we've got kids, but it's like actually a new child in the family. We're learning. We're going to the Puppy Academy in Shrewsbury, which are doing great things with us, for us. We're learning more than the hound, it's got to be said. We did our second session on Sunday. It's a 6-week course, but so many things to learn, and luckily we're all open to it. And
it's an eye-opener, isn't it? I'll tell you what, our Labrador loves a cup of tea. I'll tell
really?
you that from nothing. Loves a cup of tea.
I haven't tried that yet.
Try a cup of tea. Milk, no sugar.
Right.
And you get a guaranteed good greeting from your dog as well.
Yeah.
So
You definitely do.
more so than children.
Yeah.
Or a grunt.
Or Emma.
Yeah. The dog's always the first one to greet me when I get back home, not the missus. So yeah, absolutely. Great to see you. Thank you very much for catching up. And don't forget, if you've got any more questions you think Nick can help you with, info@sbltv.co.uk is the place to send it, and scan the QR code and you can get straight through to the website with all the information about year-end planning. Good to see you both. See you next month.
Thank you.
Thank you.